Hello and welcome back to the new stock market evaluation video. Today we are going to analyze this extremely famous company called BlackRock Incorporated with the stock ticker BLK. And as always, we are going to analyze it using this little Canva presentation that I prepared right now here. So let's begin, okay? First of all, why should you even listen to me? My name is Yasha and I am your best stock analyst who will help you make smart decisions on the stock market. Now this is me right now here, and if you are wondering how to invest in stock market as a young man from the middle class, click the first link in the description where I will teach you everything about that. Now let's begin with the analysis. This is going to be very simple, straightforward and beginner friendly because I don't want to waste too much of your time whatsoever, okay? Now as a complete beginner you should generally care about the following 6 things. You should care about chart, profit, debt, money on the bank account, value and price. Now first of all, bro, I'm sure you already know about BlackRock. It's an investment manager or investment company, whatever, which was founded in 1988 and it has worldwide recognition, bro. Everyone knows it, especially in the investment world. This is one of the top 2 go companies when you want to start with the investments, okay, apart from me. So now let's begin with the chart, okay? First of all, bro, we are going to take a look at the chart and analyze if it grows for the last 10 years. Now, what exactly do I mean by that? I mean that I will first draw a little exponential growth line, kind of like this. And then we are going to compare the actual stock price with this exponential line, okay? So as you can see, the stock price actually grows quite exponentially, which is what we want to see. Of course, it has like ups and downs, just like I'm drawing right now. But generally it's going upwards, it's going to that right top corner right now here, what we want to see. So the chart is good to go. Now we come to the profit, and for profit we also have a little instruction that tells us profit has to be in plus and it has to grow through the all years as well, okay? Now here is the extremely same story, bro. I will first draw a little exponential growth line kind of like this. And now we are going to compare the profit chart with that exponential line. You can see that the profit chart also grows kinda exponentially. It follows that line. You can see the trend going upwards, which is exactly what we want to see. So that's good to go as well. And now we come to the debt, and you can see here, bro, that the debt has to be low and also it has to preferably decrease through the years. Now, this is one of the very few companies that we analyzed that the debt is actually decreasing. So I was extremely happy to see that. And this made my day completely, bro. I'm telling you honestly. So debt is really good to go, bro. They are decreasing it massively. This is what we want to see. This is absolutely amazing, okay? And now we come to the money, and with the money, I mean money on their literal bank account, okay? For example, when you go to your local bank, to, I don't know, UBS or Credit Suisse or Bank of America or Chase or whatever, and you want to withdraw money from your bank account, this is the exactly same money that we are going to take a look at here. How much money can they withdraw from the bank account today, okay? And preferably they would have more money than the costs. And now how do we know if they have more money than costs? Bro, this is very simple. Use your fucking brain. Look, they have plus $3.8 billion on their bank account, which obviously means that they have more money than the costs, because they have here that little plus, okay, which is what we want to see, because that means that they have at least some protection against some unexpected events that might happen. You know, maybe tomorrow fucking CEO will die and then they will be like, shit, what do we do? The stock will drop. Okay, how can we repay those costs? How can we manage that? I don't know, plumbing, whatever. They have the money, okay? They can manage that. So this is what we want to see. Now we come to the value. And in terms of the value, bro, we obviously want to invest in stocks that are undervalued. Now, how do we measure valuation? With 2 simple concepts. First concept is called so-called P/E ratio, and the second one is intrinsic value. Now, P/E ratio generally means, bro, that and the second one is called intrinsic value. Now, as a complete beginner, this might sound a bit complicated, but bro, trust me, P2 ratio and intrinsic value is what you want to see, okay? Now, generally, P2E ratio should be lower than 15 on the stock that you want to buy, and intrinsic value should be higher than the price of the stock, okay? Now, you can find P2E ratio and intrinsic value on the internet. Just write BlackRock Incorporated P2E ratio or BlackRock Incorporated intrinsic value, and you find all the information there, okay? Now, P2E ratio of BlackRock is currently around 20, which is slightly higher than 15, what we want to see. So P2E ratio is a bit overvalued, okay? Now, intrinsic value is also one extremely important concept, and I want to have your full attention right now here, okay? So intrinsic value actually tells you the stock price that the stock should have at this exact moment in order to be fairly valued. Okay, you know what I mean? Okay, you don't know what I mean, so let's take a look at the example right now here. So based on intrinsic value, the BlackRock should have this price right now here, okay? One stock should cost $740, whereas right now one stock costs $780, okay? So it's around $40 overvalued. Now, how do I know that? Because the price is higher than the intrinsic value. In order for stock to be undervalued, read here again, intrinsic value has to be higher than the stock price, okay? In our case, we have stock price higher by 40 euros than the intrinsic value, so the stock is overvalued right now here as well, okay? Basically, bro, to summarize, this should be the price that this is the price that the stock should have, and this is the price that it currently has. It's that simple, okay? So BlackRock is overvalued. And now we come to the price, and for price we have here a little instruction that tells us price has to be lower than 150 euros or $150 or 150 British pounds, whatever, okay? 150 is the border that I decided for myself because this is kind of the border between overpriced stock and underpriced stock, okay? Because obviously we don't want to buy expensive stocks, because let's say that you buy a stock for 1000 euros and then it grows by 40 euros. So you get how much, like 4 cents or something. That's completely nothing, okay? You will not get rich by that. So we want to invest in stocks that are cheap, and then we just invest a shit ton of money into them. It's that simple. Now the price of BlackRock is currently $782, which is well above 150. So the price is overpriced, okay? The stock is fucking overpriced. And now we come to the final evaluation, bro, where we are just going to summarize everything that we found out about BlackRock so far. So let's go, okay? Now, is chart growing? Yes or not? Is it growing exponentially? Yes, it does. If you don't believe me, go a few minutes back and you will see the chart, okay? Does the profit also grow exponentially? Yes, it does. Is the debt decreasing? Yes, it is. Do they have money on their bank account? Yes, they do. Is the stock undervalued? No, it is not, because P2 ratio is higher than 15 and intrinsic value is by 40 euros lower than the current price. And is the price cheap? No, it's not, because it's fucking 720 or now 780 euros. So no, it's not. Now, should we buy or sell, bro? In my opinion, you should buy this stock if you are interested in it for sure, okay? But I would personally put it on a watch list, because this is absolutely amazing stock. The financials are amazing, the profit is amazing, the bank account is amazing, they are paying dividends which are growing through the years. Bro, everything is fucking amazing. The debt is decreasing, bro. Debt is decreasing. You know how often do we see that? Maybe in 5% of the stocks that we analyze. So that's absolutely crazy, bro. The only bad thing, is that the price is too high and the stock is slightly overvalued, okay? So that's why I'm suggesting you, bro, put it on a watch list, and then when the price goes a bit down or when the stock is a bit more fairly valued, you know, then you can just buy and start investing, you know. That would be my strategy. So if you are interested in it, bro, just put it on the hold and then see what happens, okay? Now, if you want to know again how to invest in stock market as a young man from the middle class, click the first link in the description. If you want to know more about stock market, click subscribe, join me on this amazing journey, do the hard work, and see you on top of the world.